Good evening, ladies and gentlemen. Just showing you replaying a intraday Periscope broadcast. Very precise, very targeted, giving traders and active investors and swing traders a direct impression of what's happening in the markets and forecast. And here we go. Please go ahead and review. Keep in mind that the Periscope broadcasts do disappear off the Twitter site, and ask Mr. Jack Dorsey that, not me, within 48 hours. So these are very important to listen to within the relevant time frame, which would be the same day. Thank you. This is a intraday Periscope broadcast. Time to time I do these to get people to stay on course, whether it be on the long side or the short side, and it's been extremely helpful for a lot of active traders as well as swing traders. So here's a snapshot of the market since the August crash, then the double bottom, and the intense volatility that preceded after that. Then this spike here was the Federal Reserve fake out, if you want to call it that way, on Fed Reserve Day, and that was on September 17. Then all the way down here, nice little round trip, and this is where we are right now. Okay, this is where we are right now. So what we're doing right now is we're moving in a very, very tight channel. We're holding this 34 and the 50-day moving averages. I've explained all this stuff on my video casts, on my previous Periscopes, on my multiple charts that I post. So we're moving in a tight band here. So traders looking for any outsized moves today might be disappointed. What we are having is outsized move on individual stocks. There's a lot of constructive formations that are in play, and people who are diligently studying my charts that have been posted to help all members on the Twitter real-time feed are clearly benefiting from that, and they know what's going on. Now, when you have a volatility, even small volatility chops in the middle of the day in such a tight range, don't ask for some huge forecast. The bottom line is very simple here. This static chart is going to be put out there for people to see, and they need to basically track it on their own screens. So this is TradingView, the platform. It's one of the best platforms to use for quick visual representation of what the market is doing on intraday. So here we have a floor here at around 207.74. That's the retest of the 34-day moving average. We also have a confluence of the 50. This green line here is your Bollinger Band. So we have a pinched Bollinger that's pointing upwards. Sometimes in charting, just use your common sense, okay? Just use your common sense. This is an upward trend in the market. Okay, this is an upward trend in the market, and this line, all these lines have been drawn, by the way, so that people can see how these algos operate. Okay, these are my lines. These are the lines that I draw. This is the reason why you subscribe to my service, because they're so accurate. So on a burst stop, what we're looking at is 210.33. On a quick selective, quick intraday pullback, we put a little hedge out there. We're looking at about 208.74. Worst case scenario, probably going to come down to the bottom of the Bollinger. We break these lines here, then we're talking about a different quick intra-day type of trend change, and we're looking to fill this gap down here at around 205.79. It's going to feel very painful for the longs because that's a pretty nice drop of close to, I would say, 160 to 170 points. But you know what? It doesn't change the trend. I've explained all this in last night's video cast, which everyone can access on the YouTube Clueless 8 channel, as well as the end of the week reports. So let's look at the internals. The internals are showing overbought conditions, no question about it. But this overbought condition is not looking like it wants to alleviate itself yet. When you start to see a movement down, that's when you start to see those little S&P puts pop up 30, 40, 50%, sometimes 100%. Haven't seen that yet. I just took a small bite, and that's a hedge. That's known as a hedge. Now, the way you play hedges is you cost average down or up, depending on which way you're going. So if you're in a put like I am right now, on S&P 2090 put, and it goes down, let's say, from like 11 goes down to like $9, you don't freak out. Because at that point, you look at the internals, maybe we're getting severely overbought at that point, and then you add a little bit more at 9. I have added as low as 60% lower and still made 300% on that money. Those are all posted on the Twitter feeds for people to see over the past couple of weeks and more. So that's just the way it works. My service is a bit of a learning curve. and because I want people to learn. It's really as simple as that. This is not babysitting. I put out enough tactical charts out there. We have had huge winners off the bat in the morning in the form of Win, Blue, even VRX, you know, for active traders. Lots of good stuff going on, okay? Don't expect this market to give you an easy way out. 1 + 1 doesn't equal 2. Just remember that, okay? This market will get clusters of euphoria and clusters of despair in the form of puts and shorts and destroy them. And clusters of euphoria in the form of calls and long positions are going to be destroyed too. So if you think you're an algo, well, I suggest you get your brain checked, because the bottom line is that these algos and HFT programs move at nanosecond speeds, and you need to track and make a determination based on my tactical charts as to how you want to handle your position. And that's basically it.